Assalamualaikum warahmatullahi wabarakatuh. Right now, we're going to present about subtopic in company law, which is creditor voluntary winding up. Before we continue our presentation, allow us to introduce ourselves. My name is Deni Hajimi bin Asyam. My matrix number 068022 F1019.
Assalamualaikum and hi. My name is Siti Nur Ain binti Ahmad Syarul Riza. My matrix number 06T8022F1016.
Hello, my name is Muhammad Aikal bin Rafi. My matrix number is 06D8022F1026.
Hi, my name is Sharani Gunasekare. My matrix number is 06D8022F1022.
For introduction, let's explain what's a creditor voluntary winding up. Based on Company Act 2016 in Section 432, Subsection 2B, it is when a company is insolvent and the liquidator is appointed by creditor during the creditors meeting. This procedure known as a creditor voluntary winding up or CVW. The CVW is the one in which the company decides to voluntarily close its operation by passing a resolution at both the company and creditors meeting. A creditor voluntary winding up is a voluntary process, but it also unintentionally an admission on the part of the company director that the company is insolvent and no longer viable. For example, based on the Sinar Harian article on 12 October 2019, it stated that the management of Putusan Melayu choose for the creditor voluntary winding up of the newspaper is for the purpose of saving the newspaper brands and license. Moreover, in an internal memo distributed to company staff by the executive chairman of Putusan Melayu, Dato' Abdul Aziz Sheikh Fazil, is reported to have said that the board of directors of Putusan Melayu on 7 October 2019 approved the proposed creditor voluntary winding up, thus deciding to close the company operation, and all assets under the company will be sold to pay off the debt. Last but not least is what is the right of liquidator in creditor voluntary winding up. A liquidator is appointed after the creditors meeting held. A liquidator plays an important role in this kind of the winding up by taking control of the wound-up company asset, selling the asset and trying to maximize the distribution of the proceeds to the creditors. The creditors meeting is required to conduct the procedure, and this procedure will be explained by the next presenter, which is Ain and Haikal.
A company can become insolvent due to a number of situations that lead to poor cash flow. If the company is not able to meet its liabilities, the company can convene a meeting with its creditors to consider its proposal for a voluntary winding up of the company. This meeting is not necessary in a member's voluntary winding up. So, these are the procedures of the Companies Act 2016 that are required in conducting the creditors meeting. Section 449 subsection 1 of Companies Act 2016, the company should have a meeting with the creditors in proposing for voluntary winding up. That means the procedure begins with the company calling for the creditors meeting. The company shall cause a meeting of the company's creditors to be called on that day or the next day, at which a meeting shall be held, at which a resolution for voluntary winding up shall be proposed. So let's move on to the next procedures of creditors meeting. In section 449 subsection 2 of Companies Act 2016, Notice of meeting. Both notices of creditors meeting and companies meeting to pass the resolution for voluntary winding up to be sent simultaneously to creditors by post. That means if a meeting of creditors is called under subsection 1, the company shall cause notice of the meeting of creditors to be sent by the post to the creditors simultaneously with the delivery of the notice of the meeting of the company.
I will explain about creditors voluntary winding up under the Section 449 subsection 3 and Section 449 subsection 4. Company may opt for creditors voluntary winding up if the directors believe that it cannot by any reason its liabilities continue its business. They will appoint a liquidator to wind up its affairs of the company and distributing its assets. Section 449 subsection 3, the company shall convene the meeting at the time and place convenient to the majority in value of the creditors and shall give notice by pass of the meeting to the creditors at least 7 years and send to each creditors together with the notice of meeting a statement showing the names of all creditors and the amounts of their claims. For Section 449 subsection 4 is the company cause notice of the meeting of the creditors to be advertised at least 7 days before the date of the meeting in one widely circulated newspaper in Malaysia in the national language and one widely circulated newspaper in Malaysia in the English language.
Next, let's move on to the fifth procedure of creditors meeting. Section 449, subsection 5, Companies Act 2016. The directors are required to prepare a comprehensive statement of the company's affairs. This statement should provide a detailed overview of the company's financial position, including information about its assets and liabilities. The purpose of this statement is to give creditors a clear understanding of the company's financial health. The directors must include in the statement of affairs a list of all the company's creditors. The list should identify each creditors and provide an estimated amount of their claims. Including the estimated amount of each creditor's claim is crucial for creditors to assess the potential impact of the winding up on their financial interests. The prepared statement of affairs along with the list of creditors and their estimated claims must be presented in the meeting of creditors. The directors are required to appoint one of the director to attend the meeting of creditors. The director will represent the company and provide any necessary clarification or information related to the company's affairs. Next, let's move on to the conclusion of this presentation. In conclusion, creditors voluntary winding up represents a collaborative and transparent process between a financially distressed company and its creditors to wind up its affair in an orderly manner. The initiation involves a creditors meeting where the company's financial position and proposed plans are presented and creditors vote on crucial resolutions. The appointed liquidator then takes charge realizing assets, setting liabilities and prioritizing payments to creditors. The final meeting of creditors reviews the completed accounts and upon approval, the company applies for dissolution. This marks the culmination of the winding up process, resulting in the removal of the company from the register, signaling the end of its corporate existence. The framework ensures fairness in asset distribution and provides a systematic approach to resolving the financial challenges faced by the company. Thank you.